Hi everyone, this is GT with Slice. A lot of our potential investors love the idea of investing in the heart of New York City. But a question we keep on getting is who is the developer and how can I, the investor, know that the developer is actually going to complete construction on time and within budget? So today I have Nir Amzel with me on the line. Nir is the co-founder of HAP Investment Developers, a company that is based in New York City and Tel Aviv, and that since 1998 has successfully acquired, designed, and developed a diverse portfolio of residential and commercial real estate in prime locations. HAP has been active in the New York City area since 2010 and was covered by publications such as the Wall Street Journal. Hi Nir, how are you today?
Great. How are you? Thanks for having me. I'm really happy to be here.
Likewise, I've been looking forward to this.
Yeah, me
Nir,
too.
I'm on the HAP website right now and I see about 30 real estate development projects. 11 of them are in New York City and one is in New Jersey. Can you start off by giving us a little bit of background on HAP, the company, and perhaps you can explain to our audience why you chose to focus on New York City?
Sure. So first of all, thanks for allowing me to talk about HAP. That is something that I like doing and I can do all day. HAP Investments basically a development company that is taking responsibility for the whole value chain of real estate. And we're starting from identifying deals that we receive from brokers or peers or owners themselves. And we have our own business development team, analysis, underwriting, and we are capable of receiving deals, deal flow, and we are scrutinizing deals, and we have the ability right now to check and underwrite development deals in New York City within like 2 or 3 days to see if they make it to the short list of the deals that we pursue later. So basically we take it from receiving the deals and then later on acquiring. So we do the acquisition, we do the sourcing of the investments, and then go ahead to design, build, operate, and then realize the project themselves. So that's what we're doing. We've been doing that for the past 20 years or so in territories all over the world, and mostly in Israel, Hungary, and the Ukraine. We started off in New York City just after the crisis of late 2008. So around 2009, 2010, we entered the New York City market. The reason we went into New York City was that on the one hand, our strategy and maybe our best attribute, I would say, is the identification of up and coming areas where we want to do deals that are going to have double vector of growth. One of them is the actual market timing that we enter the market, and the market has to be in good shape. And the other thing is that we want to be in areas that have growth potential that is above the average growth potential of, let's say, the New York City itself. So we don't want to go into areas that are very well established. We want to go into areas that still have growth potential. So that's our strategy, and that's what we're pursuing so far. And then I would explain to you, because sometimes we do work in good neighborhoods, but it's still I think in line with our strategy, like I said, which is to be in up and coming areas. It doesn't necessarily have to be an up and coming neighborhood. It could be an up and coming block within a neighborhood that's established already.
Our listeners are particularly interested in your development project in Chelsea on West 28th Street. Why did you choose
Yeah.
Chelsea, and what else can you tell our listeners about this project?
So first of all, like I said, if our strategy is to go to up and coming areas, people might ask, what's up and coming about Chelsea? It's already up and it came, and that's true. I mean, like I said before, we're working in Central and East Europe, as well as in Israel. Some of these areas are up and coming, as you know. And the reason we chose Manhattan is because it's a very strong market. However, and so it does not have the potential to go down significantly and decrease in value as we've seen in other places in the world, in Eastern Europe, places like that. However, we do not want to lose our expertise in identifying the up and coming areas. So to answer your question specifically, in Chelsea is quite a big area, as you know. It stretches from more or less 15th Street to around 30th Street on the west side of Manhattan. And what we saw as an opportunity was basically the rezoning of the block that we are in, where the project is located, which is between 7th to 8th Avenue on 28th Street. Now, this block, as well as the block on 29th Street, between 7 and 8, has been rezoned. Now, it has been rezoned recently, and we have basically bought the first land plot in our project, the first three actually, in 2013. So then basically, when it was rezoned. So we were buying it from the owners that were responsible for the rezoning of the area, and basically increasing the volume of construction from 6 stories to 20, with change in designation for residential, and because some of the buildings there were light industry, parking lots, things like that. So basically what we did was we were able to buy in this area basically at a lower cost per buildable square foot, because we were buying it from people that just basically did the rezoning now, and they were willing to leave some of the value for the developer that's going to buy it. So just to give you a numeric example, we were buying it at around 600 to 700 a buildable foot, whereas if you go to the more established areas of Chelsea, at the same time you were buying it for 900 to 1,000 a foot. So, and why? Because you wanted to, people look at the block and they say, it has like a few more years to come before, like 5 years before it's going to be here. So we want to pay more if we're going to buy in a place that's going to be, that's already established within the same neighborhood. So we saw an opportunity for appreciation within a block that has just been rezoned. And so that's one thing. The other thing was that, first of all, you always have to look 5 years ahead or 3 or 4 years ahead when you buy a land, because on average, that's the time that it takes since buying a land and until the realization of a real estate project on the land, based upon the fact that you are pursuing this project from the time of the acquisition. You don't wait and you don't hold on it. So you have to actually take a look at this area and say how it's, and try to imagine how it's going to look in 5 years. And so you go to the city and you see, the zoning and the plans, and you see, if you see anything that might affect it. And so when we were looking at the area, we saw that Hudson Yards, which is basically located around 2 blocks from this, which is an immense development project, was dubbed as the biggest privately owned development project in the history of the United States. So we saw that it's going to be really close, and there's going to be a lot of office space to be formed, developed, and rented later. And we believe that this is going to, and this is already affecting, and it's going to keep on affecting this area because it's only 2 blocks away. So we saw the revitalization of this area, and we can see it in value. So that's the first thing, and this is why we chose this area that we think is like a small piece of Chelsea that is still up and coming. And, we can see it in the value of the land, which has increased significantly. This was the reason of, choosing this location. As to general things to say about the project, first of all, we started off with 3 lots, and now the project is basically at around 8 lots, which encompass around 20,000 square feet of land. And it's going to be, it is already under construction. It is one of the more complex digging, excavation, foundation projects in the city right now, due to the fact that we're digging 3 stories underground. And there is going to be a lot of amenity space with great amenities, very elaborated amenities. And so slowly, we bought almost half the block, one lot after the other. Took us 3 years to make the assemblage, and then we started construction. And the last thing I would mention, seeing that this is like an almost $400 million budget project in terms of cost, we have basically made a joint venture in this project with a huge Japanese company that we're working on in this project, and they are great partners for us. We are honored to have them as partners. They're called Daiwa House, and this is their biggest development in the US so far. We have great relationship, and we have their representative present in many of our meetings, design team and project meetings, and we enjoy very much getting their input and their immense and amazing experience. So far, it's like a 15,000 employee company, and it's huge. And we are very honored and privileged to have them as our partner in this project.
Yes, I've seen the construction site, a video of the construction site rather, and it looks like things are coming along nicely. I see the machinery, people deployed on the ground. At what stage is the project right now in terms of construction?
So we are now in the excavation and stabilization and the foundation stage, which is a significant stage. At the end of the day, it's going to take almost half of the project timeline to get out of the ground. Once you get out of the ground, the construction is fairly easier, I would say, and more streamlined, because under the ground you can find some surprises. As you know, you can find rocks and bedrock. You have to get to the bedrock in terms of drilling, and sometimes you don't know, surprises that you're gonna get there. Water, rocks, things like that. We've seen all kinds, and so. Like I said, the stage right now is the excavation foundation. We are also reinforcing the adjacent buildings, because it's a significant construction. And the other thing is that what we have came to agree with our contractors is that now they're working double shifts. We also got an approval for after hours and weekends. So basically, this is except for Sunday, that's 6 days a week, double time, double shift of construction in order for us to expedite this part of the construction and to get it done as soon as possible. So that's also our contractual understanding with our contractors. So basically, we are trying to give them, bonus if they finish ahead of time. So that's the agreement with them, and we're trying to get to that point.
How about the architecture and design? I've seen the models and they look incredible. Who are you guys working with?
We're working with DXA Studio, which is it's a great new architect firm with 2 partners that are doing great projects all over the city. in terms of the layouts, and I would say the division of into apartments, and the types of the typology of the apartments, which types. We are working with Douglas Elliman with the Eklund Gomez team, which is the leading broker team in New York and the leading broker team in Douglas Elliman for a few years now. And they have been working with us on this project since day one. So we are basically planning the project based upon the market needs, and not like sometimes happens, in real estate where developers, first of all, they develop the project and then they call the brokers and tell them, okay, sell the units or rent them out. But then they say, people here in this area, they want a balcony, or they don't want a balcony. They need parking lots, so they don't. We need to go and to basically approach families rather than single people. So, you want to have this type of input in place at the right time, and not present the broker with a done deal and tell him, go ahead and sell it. So we have like a kind of a holistic approach to this thing, and we have the meetings are being held with all parts, with all these suppliers, I would say, or consultants together in the team, in the meeting. And of course, we are also the construction management company in this project, and we're doing the management ourselves. So we're doing the supervision and management of construction ourselves in-house. We have a team that's dedicated to this. I can tell you that this is our most skilled and experienced team in HAP in construction that is taking care of this. We have 4 engineers and architects in-house that are appointed to work on this project, and we're giving it a lot of importance as part of our whole development basket.
Yeah, and you guys definitely have the experience, and I actually want to take this opportunity to encourage our listeners to go on HAP's website. It's HAP, HAP-NY.com. And I want you guys to hop over to their website and look at the portfolio. And these guys have the track record and experience. The last question I have for you is, what is it about Slice's technology that HAP found valuable, and what value do you think it brings to cross-border investors who are listening to us right now?
So first of all, let me start with something. I'm in the low tech business kind of. So I will start with not so much with the technology, but I will start with the people. So first of all, the team of people, experts in Slice, to me is amazing, because when I was looking at it, I saw a truly interdisciplinary team that has experience in high tech, has experience in finance and financial markets all over the world. It has experience in streamlining business procedures all over the world, and in legal, financial, and real estate and construction. So to me, first of all, and the people themselves, great people with a great and proven track record, and pleasant people to work with, and very reliable and honest people. So first of all, to me, that's the first thing. Now, as to, of course, the technology, which is the reason we are working with Slice at the end of the day. So I think that while we attract investors to our projects, we need to have the investment done as streamlined as possible, and at the end of the day, as cheap as possible in terms of transactions. In terms of the costs, we want to have as much money flow into the project itself, and not so much on commissions, on costs, on deal costs and things like that, because at the end of the day, it hurts you twice. First of all, you're paying it, and that's a sunk cost kind of. And on the and in the same manner, it also is not going into the project. So this money that you lose on transaction costs and all of these types of things basically does not work as well in the project. So it doesn't, I mean, you spent it and it doesn't accrue any profit. So you lose twice. And this here is a seamless process which streamlines the investment in cross-border transactions in terms of money and finance. So that's one thing that we really appreciate and makes life easier for the investor and for ourselves. And to me, it's a great revolution, because I've been working for more than 20 years in investments like that, and this was just like something that was unbearable sometimes with the banks. So if there's a way to do it in a better way and streamline it, then that's amazing. That's the first thing. The second thing is the possibility to have liquid investment as an LP, which is to me, is just a revolution of direct investments in real estate, and possibly in other areas as well, but in real estate in particular, and that's what I know. So, having limited partners being able to create a secondary market in which they can trade their interest in the project, it makes life easier also for the developer, not only for the investors. The investors I think is obvious, and you probably can explain it better than me. But as to the developer, it makes life easier because you are not quote unquote stuck with the investor necessarily for the whole duration of the project. You can, the limited partner can have the possibility of liquidating it, sometimes in a profit, maybe in a small loss. But a development project is something that takes usually a long time. Specifically, maybe in HAP, it's not a big deal because it's already under construction, and it's more than 6 months under construction. So we're making up good time. But still, in other projects, in development projects where you get in at the acquisition stage, where you acquire the land, usually it's a 5-year horizon. Let's say between 3 to 5 years of investment horizon, and things change for people during that time sometimes, and maybe good things or bad things happen, and they need the money. And this allows us as a developer to be agnostic to that, because they can basically trade it with other people and then have the possibility of liquidating their investment. And then they are not also a burden to us as developer in terms of trying to assist them in getting in and out of the deal if they have some circumstance that arises during the period of the development of the project. So we want to have our investors with patience, because that's the main thing in development. You need to have patience in order for the project to be realized in the highest value possible, and maximizing the profit and value of the project. Now, if you're going to have 100 investors, I'm just saying, and out of them 10 really need the money right now because something happened, or not, for them personally, then they're gonna basically at the end of the day also possibly damage or harm the other 90 investors. So this allows us to have the peace and quiet for us to build. And HAP also has the motto and a strategy of co-investing with their LP investors, so that we would have, and we would maintain as a model, we would have the same interest as our investors. And the alignment of interest allows us to make tough decisions sometimes if necessary, because everybody knows that we also have millions of dollars invested in LP funds within the project. And this alignment of interest helps us, explain sometimes why our decision is for the better of the project, rather than seeing the immediate short-term return. So, as they say, put your money where your mouth is, and that's what we're trying to do.
Yeah, definitely. It's definitely encouraging to know that the developer has skin in the game. And also I agree that the flexibility that the optional future liquidity brings, it's not only beneficial for you guys, but also for the investors, for everyone. It just streamlines the process and gives everyone great flexibility. If our listeners want to learn more about the benefits of this technology, the distributed ledger technology, I encourage you guys to go to our Medium blog. We have just published about a week ago a very extensive content piece about the benefits of this technology for cross-border investors. So by all means, feel free to visit our Medium blog. Is there anything else I forgot to ask you today about HAP or the project that you would like to add?
Like I said before, talking about the projects and HAP is like talking about my kids, so I can do that all day. But then I would think that you would have like a drop in the volume of listeners. So we're going to keep it short. I think that we touched on the main things. Again, we are always open to give any answers. We like working with investors. That's our DNA. We've been working with investors since inception. We've been co-investing with our investors as limited partners in equal terms. And since inception, that's our motto. And, we hope that people would join us, would taste how this investment works, and hopefully make money, and hopefully would come back again and reinvest with us. We have around 50% of returning investors, and we hope that Slice and its investors would also be part of this community.
Excellent. So with that, I'd like to turn to our audience right now and ask you, our listeners, to submit your questions if you have any. You can either type them in the comment section below or email us at team@slice.market, and we will answer each and every one of you. So with that, I would like to thank Nir Amzel again for joining me for this interview. And
Pleasure. Thank you very much for having me.
Yeah, the pleasure is all mine. I'm GT with Slice, and I will talk to you soon. Goodbye.